चेक चेक आ रहा है अभी, देख क्लियर है। क्लियर है, ओके ठीक है ठीक है।
Event is aimed at getting all of your questions answered. So while there will be a panel discussion, there will be a significant amount of time for you to ask questions. And I'm sure that the experts that we have today will be very happy to facilitate. Yes, of course. I remember you. No, just sit. Please sit. Please sit. And please make your way to the front. We're starting. Everybody, please put your phones on silent if you can do that. Thanks so much for joining in. This is NDTV Profit's on-ground event called Invest 2029. This is a crucial week because it will shape the course of the next 5 years. We have, of course, seen the developments all through the week and the run-up over the last several weeks leading up to counting day on Tuesday and the results. We have yet to see the formation of the government. Now, I'd like to thank everybody joining in person for coming here. We truly appreciate it. And of course, we are live on all social media platforms and on the television channel right now. So if you're joining in there, thank you so much for taking the time. My name is Alex Matthew, and I will be your host this evening. Now, at the start, I have to admit that sometimes I find it hard to explain how equity markets move. And every time that there is a wild swing in the markets, I'm reminded of a comic that I came across in a newspaper a while back. It's been around for 35 years, so it's possible that you've seen it as well. It starts with a gentleman on the phone, possibly talking to a client, saying, I found a stock that I think will excel. Somebody passing by hears, sell. And he says, did he just say sell? 5 other people say, sell. And then there is this wave of selling, markets crash, and there's absolute chaos. It reaches a point where another person picks up the phone and says, I can't take this anymore, goodbye. One person hears buy, 5 other people say buy, and there is a wave of buying. The result of that, inevitably, is that an equilibrium is finally found. And if you look at this week, it started off with a surge in equity markets. There was a nosedive on Tuesday. On Wednesday and Thursday, there was frenetic buying. And incidentally, the domestic investor is the one that is buying. I spoke to 4 mutual fund houses yesterday, and senior officials at these houses, and they've all told me that they saw significant inflows on Tuesday when the markets were crashing. And what that tells me is that the Indian investor had cash ready to deploy for just such an opportunity. But if you had the misfortune of being on an island somewhere without connectivity all through the week so far, and if you were invested in the Indian equity markets and you just got access to your portfolio, chances are that you would not be too worried. In fact, you would probably rue the lost opportunity of Tuesday when you could have called in and said, buy. I hope that the panels that we have lined up today will answer several of your questions. I'm sure a lot of you have those questions, not just about where India's equity markets are and what the fundamentals of the companies that are listed on the equity markets stand at, but also the course that the political scenario will take from here. What form will the government take? Where will the cabinet, what shape will it take? All of those questions are going to be answered over the course of the day. But let me start by introducing the first panel without further ado. We're joined, and I don't think that they need any introduction, so I'm going to quicken this. We've got Neelkant Mishra as well as Madhusudan Kela joining in. I'd like to invite them on stage. Please give them a big, big round of applause. And to host this panel, NDTV Profit's very own Neeraj Shah. Neeraj, over to you.
Thanks, Alex. At the outset, this is as much a television event as it is an on-ground event. So a lot of familiar faces here. And for people who, we're going to try and make this more interactive. So for a lot of you who are tuning in on television as well right now and our social media platforms, if you have questions for Mr. Kela or Mr. Mishra, please put them on any of our social media handles and I'll try and ask them here as well. Of course, people in the audience, if you have questions, please feel free to raise your hands as well, and we'll try and make this a lot more interactive. Okay, let me kickstart this by a question to either of you. Can start, and okay, let's start with you, Mr. Mishra. What's your sense about what happens next? Because a lot of people, for a lot of investors, this is something that they haven't seen. Last 10 years, you haven't seen, quote unquote, a coalition government, where hands could be forced, etc. Do you reckon that even with 240 for the BJP, the hand could be forced and therefore policy making could be slightly different than what it has been for the last 10 years? And could it impact equity markets?
Yeah, so the answer for that is very simple. I don't see any impact at all. And there are many reasons for that. First is that the impact of the central government on near-term growth, let's say the next 3 years of growth and the next 3 years of earnings in the market, is insignificant. The central government matters significantly for growth, say 5, 10, 15 years later. So, for example, GST is delivering returns now, but when GST was introduced, remember, all of us were mumbling as to whether it was really necessary. It was so chaotic, right? So reforms are always messy, painful, and at the central level, they deliver returns over a very, very long period. In the near term, the impact is primarily on through fiscal policy. Otherwise, most major factors of production, land, labor, last mile price of energy, are all controlled by the state governments, and there's no change there. So, if someone was to tell me that the markets really are pricing in growth 5 years later, I would tell you that they're not part of the market. I think from a perspective of earnings growth in FY 26-27, which is what is going to drive the market over the next 12 months, I don't think anything that happens other than the fiscal stance is going to be really meaningful. So the rest becomes moot. I don't think, and which is why my advice to investors starting over the weekend when the exit polls came was to say, do the opposite of what the market does.
Okay.
Right? So if the market rallied on Monday, I said you should be taking profits. The market tanked on Tuesday, I should be buying. Because clearly from the perspective of earnings as well as the price to earnings, I mean the flows that Alex talked about, the unintended flows into equity markets, meaning people buying because without really trying to time the market. The SIPs, when we started at 5,000 crores a month or even lower than that, they seemed unbelievable. Now they're 20,000 crores a month. EPFO flows are $7-8 billion a year. Insurance flows are accelerating. This is now, when I started talking about this, it used to be $20-25 billion. Now it is $35-40 billion a year. With these kind of flows, how will the price to earnings come down? And if the real estate cycle is turning, and which is why our economy is doing much better than the rest of the world, people are not going to stop buying houses just because, the government should have had 280 seats, but it got 240. So fundamentally, I think this is just a wash. If you're really worried about 5, 10, 15 years of growth, the need to do really deep structural reforms and whether that will be possible or not, those are bigger issues. But I don't think the market will bother about.
There is a lady who's joined this forum, and I'll ask her to ask a question to you because she said that she wants to ask Nilkanth Mishra a question about whether we'll grow old before we grow rich. So I think that is something that will come in, and it's something that you've written on. But Mr. Kela, the same question to you really. Do you think policy making changes in a way that can upset the markets? या ठीक ठाक ही है? I mean, 240 है और NDA come to power, Modi ji Prime Minister हैं तो सब कुछ सही है.
So I think there's a big if that whether the policy making will have a meaningful change. And my own view is that it will not change meaningfully. Because see the way the political equations are, right, they are not first dependent on a party, right? If you are coalition karke, if you are only 272, then anyone's bargaining power is tremendous. Here there are at least 10 parties who are making from 240 to 302. And there are 20 independent MLAs, and there are equations between other political parties. So I do not think so. One should, I am not questioning the stability of this government as of now. What happens in the future, we will see if there is any development. So there is no. The other thing is that, whether it is a BJP government or any other government, you look at it, everyone wants development. And for instance, one of the important coalition partners is TDP and Chandrababu Naidu. He is the most pro-development, Chief Minister, at least even in the last term. He wanted to build a new city, etc., etc. And he has been a big reformist himself. So I don't see a big opposition to economic policies from all of these guys, and hence I don't see big questions on economic development or economic policy. Everyone wants to build infrastructure. People want to work on railways. People who will not like to encourage manufacturing, who will not like to say that we should, localize manufacturing, etc., etc. So for those things, I don't see. Where there could be impact would be on big social changes or social reforms, which we were wanting to, one nation, one election. But those kind of things, I think we have to give it a few months before we can take a call whether those things will be part of the government near-term agenda.
Okay. A follow-up really, and a lot of people have said this, and I would love to understand from both of you, but Mr. Kela, the question to you first. There was a Modi premium attached. India was always expensive, but people thought it will remain expensive because of the growth and the policy making. You reckon that premium that India has enjoyed in the last 5 years, albeit if not the last 10 years, stays intact relative to other emerging markets and relative to India's own history?
I think the premium was actually what was Modi doing in this country in terms of economic policies. And that's what I said, that in my view, there is no real change.
But and if, in the eyes of the investor, the premium also
and
stays.
If there was an uncertainty whether Modi himself is going to remain a Prime Minister of this country for the next 5 years, then I would say markets had a potential to get derated to the extent of that extra premium which has been commanded by Modi ji, right? I don't see that as a question today. I think this government will last 5 years, in my opinion, and it will be a stable government, and it will continue to deliver on the economic front.
Okay. Mr. Mishra, a question to you on the math, as in some fashion, the math. There was a RBI dividend that came in. There was a glide path that has been done, and the purse is limited. So suddenly लोग बोल रहे हैं कि पहले अगर 100 रुपए कैपेक्स में जाने वाले थे, इंफ्रास्ट्रक्चर पे जाने वाले थे, now could there be a shift to some populist measures to अगर rural dissatisfaction है तो उसको correct करने के लिए out of that 100 rupees क्या थोड़ा इन सब में चला जाएगा, which otherwise it may not have gone if it was a resounding victory, and therefore could it change the portfolio construct because earnings of some sectors might not do as well as it was earlier in research, and some sectors might come to the fore. Any thoughts there?
Yeah, I think that is where there is the biggest disconnect. So many have observed that the response to the political setback would be an economic one and a fiscal one. So I think and there I think people are maybe going too far. The first is when people in the markets tend to behave like a guy with a hammer to whom everything looks like a nail. So because we are used to dealing with money, the solution to every problem is monetary. If it was, I'm not a political expert. I mean, I'll be lucky if I get my economic and market calls right. But when I look
You're being
at
too modest now.
no, but when I look at the electoral verdict, if it was the poor who sort of cast a vote against the BJP, then how is it that the BJP swept MP with no loss in vote share? How is it that BJP got 10 out of 11 in Chhattisgarh? How is it that they retained the third time in a row all the seats in Himachal and Uttarakhand, or did much better than expected in Bihar?
And Odisha.
And they won back Odisha, and they won Odisha for the first time. So, why is it that the problem was only UP and Maharashtra? And now, if you do that, so as important as the verdict, when you're thinking about policy making, is how it is interpreted. It is a very lazy interpretation that it was just because of the poor. See, we know that there is a rise in inequality. We know that core inflation is weak. We know that labor does not have pricing power. There are many, many reasons for that, and we can discuss that if there is interest. But that was not the primary reason why the BJP lost seats in UP and Maharashtra. And if that is not the case, then why would you want to address it? So, and why? And is it important if you have to address it? Is the right tool just to transfer money into the hands of people? And if the government chose not to do that, even before the critical 2022 UP elections, if the government chose not to do that in the 2023 budget and the 24 budget, why would they do it now? In fact, I think that the fiscal target, see, FY24 deficit, as you know, was brought down from 5.8 to 5.6. The same reasons would apply. The reasons why they saw better dividends from PSUs and all of that would apply in FY25 as well. And then you have the 0.4% of GDP worth of extra RBI dividend, because RBI was supposed to give 85,000 crores in the budget, they gave 2.11 lakh crores. I think that when they present the budget in July, they may actually bring it down from 5.1 to 4.9. And to add to what we just discussed, one of the reasons that India has garnered a premium is visibility, right? So why is it that metal stocks trade at 10 times earnings and consumer stocks trade at 40, 50 times earnings? Because you have greater visibility on future earnings. So effectively, you have better visibility on 26, 27 earnings, so you are giving a multiple on that and discounting back. The reason why India has garnered this premium is macroeconomic stability. Right? So we have predictable inflation, we have predictable rates, we have predictable currency. The moment you start slipping on the fiscal side, a lot of this will go away.
No, sorry, pardon me. I'm not saying slipping on the fiscal side. What I'm saying is that wo jo 100 rupees the, so fiscal deficit, let's assume, is 5.1 or 4.9. But out of the 100 rupees that was going for capex, maybe some of it might get diverted. So, and again, just a small counter to the point. Could the feeling be, because a lot of quarters talk about it, that this whole narrative of the opposition, 8,500 rupees khatakhat aapke account mein, might have also played a part in losing elections? And
see, again, I think I'm sure there's a panel after that which will discuss the politics behind all this. But if that was the case, then they would not have done as well as we discussed in other poor states,
okay.
right? So it's not that those offers were made only in UP and Maharashtra, right?
That's true. Okay, fine.
So, but the reallocation of resources, if you ask me, I think the kind of schemes that the government pushed in 2014 to 19, where individual households got the tools to improve their productivity. So they got toilets, they got pakka houses, they got electricity, LPG cylinders, bank accounts, access to payments, UPI and all that. Those kind of reforms where individual households, like, rooftop solar or piped water access and, ramping up of that, or maybe coupons for higher education, maybe skill building coupons, right? So there are tools that I think the philosophy of the government, of the Prime Minister, is more to teach a man how to fish than give him fish to eat. And I think there is no reason to believe that philosophy will change.
Got it.
You wanted to make the point.
Yeah, I just want to make one point on fiscal. See, India as a country has a very strong balance sheet. We may have a poor P&L. And that balance sheet has significantly strengthened over the last 4 or 5 years. Just to give you an example, in 2020, the market capitalization of all PSU companies put together was 13.5 lakh crores, out of which government ownership was 8.5 lakh crores. As of today, that is 72 lakh crores. And the government ownership is 48 lakh crores. Last 5 years, we had very insignificant contribution from PSU disinvestment. So if they were to invest somewhere else, that flexibility is there. That you don't have to strategically divest anything. You maybe sell 2-3% of all companies, and you can still garner more than 1 lakh crore rupees, and that is something which you can use. So I am saying there are many levers to play on the fisc side, and that should not worry the market.
Well, that's true. Actually, in an interview just before the elections, Modi ji ने संजय पुगलिया हमारे एडिटर इन चीफ को बताया था कि डिसइन्वेस्टमेंट क्यों करना, आप देखो PSUs कंपनी के वैल्यूएशन कितने हो गए हैं, and therefore they seem to be maybe not necessarily against, but not necessarily on the path के they want to disinvest everything, seemingly so.
That was the case maybe 4 years back. अभी उनको भी मालूम है वैल्यूएशन बढ़ गए.
That's true.
Where things may change, right?
So actually, let me ask that to you, Mr. Kela, because you were amongst the earliest and the most vocal proponents of investing in PSUs, at least from what I know, right, on the buy side. So now you've seen a rally, PSU banks में rally हुई है, PSUs में rally हुई है. Do you believe कि ये rally intact है? Would you stay invested or buy more of PSU companies?
So the narrative has changed. At that time, I was bullish maybe across the board. You buy defense, you buy railways, you buy PSU banks, anything, and one was willing to bet. I think markets going forward will become very selectively. So I can't say that you buy the entire PSU basket. I must admit and say that in some pockets, the valuations are, in my humble opinion, unsustainable. Because we've gone too far into the future and discounted, earnings for a very long period of time. So the kind of investor I am, अपने को तो रुपए का 4 अठन्नी नहीं मिले, तब तक लेने का नहीं है, right? So I am not going to pay this kind of valuation to buy any story, right? But for instance, again, you please run the disclaimer. It's not a thing to buy PSU banks. I am still very comfortable because they are still trading at 5-6 P multiple. If I take a 2-3 year view, their balance sheets have improved significantly. A lot of them have 18 to 20% ROE, and they're still trading at one-time book value. If I take a 2-3 year view, there could still be an opportunity. So I don't think it's a basket case of buying entirely PSU or selling. In fact, I feel really sad because a lot of retailers are buying this random, right? कुछ भी लेने का है. Some of the PSU finance companies have become more expensive than HDFC Bank and Axis Bank. I can't figure out in my head that is why that is possible.
And disclaimers
but
put out there,
that's the market.
That is the market. Yeah, it teaches us new every day. Mr. Mishra, what's your portfolio strategy like? I mean, even if it is present continuous and you don't see too many changes, if your large clients are coming out and asking you, okay, ideal portfolio construct क्या होना चाहिए? What would your thoughts be?
So the medium term trend, see, my portfolio construction tends to be very boring because you make a bet and then you think a lot before you make a bet, but when you make a bet, you stick to it. So I still will say the same thing I've been saying for the last 1 or 2 years, which is that India's economy is doing well because the real estate cycle has turned. When the real estate cycle turns, it stays turned for a while. There will be phases. First you see demand for steel and cement, then you see demand for cables and wires and sanitary ware and fans and paint and all of that. So I think the whole ecosystem, I think there is significant upside. I think we have underinvested in energy, meaning power demand for a while. Again, boring, but if coal output is up 10%, if power demand is so strong, and I think power demand will become even stronger because all this investment in AI and computation and all of that. And frankly, if India has to grow, India's energy demand will grow, and energy demand, we don't have oil and gas and all of that, so we'll grow electricity to the extent possible. And so utilities, financiers, because there, I think the market has been overly pessimistic on their prospects. And I think there will be decent credit growth. I think the investment cycle is turning. Maybe there has been a bit of a lull because of the elections and some of the uncertainty, but the lag of 3-4 months, I think the investment activity, the order book growth will start picking up again. So those would be the areas on which I would focus. We are underweight industrials. We were underweight industrials going into the election because I found them very expensive. But fundamentally, I think 25-30% earning growth in many of these stocks are very good. Some of their stocks have corrected. We wanted to put out buys, but they seem to have rebounded much faster than But yeah, so those would be that would be the portfolio construct. It hasn't changed at all because of what has happened.
Okay, sorry, you wanted to make a point? I thought. Okay, just before I asked Madhusudan Kela about his portfolio construct, one follow-up to you on the first point that you made, and then the audience, if you have questions, and a couple of pings on my phone tell me that there are a couple of questions that are coming from the audience as well, which my team has forwarded me. But one question, you started off this conversation talking about the real estate cycle and the uptick thereof. A lot of people now start asking, "Ke itne ghar khareed kaun raha hai?" Because these are expensive homes that are being bought in Gurgaon, in South, in MMR region, record after record, every single month. I mean, is this how an upcycle in real estate could look like, or is this only pre-sales and actual sales might differ? Because a lot of people ask these questions.
Neeraj, share bazaar wale khareed rahe boss.
Yeah, maybe that's true. But yeah, but seriously.
See, here I go back to basics. Remember that while our population growth has slowed below 1%, the number of households in India is growing at 2.4% a year. The average square footage per person in India was about 100 odd square feet versus 550 square feet in China tier 3 cities, 300 square feet in tier 1, tier 2 cities in China, 700 square feet in the US. And China and US also still growing. This is called the hedonistic adjustment. So as people get more prosperous, they want bigger houses. So these 100 should be becoming 200, 300, sometime in the next 15 years. The quality of construction needs to keep going up. In fact, when I was in Singapore a month back, and I happened to visit a friend whose house was built 25 years back, I came back and told my wife, boss, the construction in India, in the current houses, is far superior to what was there in Singapore 25 years back, or 20 years back. So the cost per square foot of construction needs to keep going up. Right? So from 300 rupees a square foot for the PM Awas Yojana type to 2,500 at least for a 5-story construction in a city. So the construction value needs to keep going up. And so why did we have a decade-long downturn? And when you see that is why urban real estate has natural cycles. See, in rural real estate, you'll never see cycles because everyone has a piece of land. When the son gets married, you build an additional room. If the whole family gets married, then you build an additional floor. But the point is, cycles happen in urban India. And so you have a period of excessive construction, and then you have a period of too little construction. And so we are moving, and what has also happened, if you plot the real estate price index as provided by the RBI against the per capita GDP, for a decade, that was running well ahead. Prices were running well ahead of incomes. In the last 5-6 years, they have actually lagged. So the affordability of the same houses has actually improved. So it is not just the rich houses, because just that will not drive the kind of cement consumption that we are seeing. Cement consumption cannot be double digits, if we're just building Lower Parel and Worli houses, right? So I think that this is far deeper. This is in any country, right? So if you take a snapshot of a developed country and compare it to India, the country is developed when it has high capital stock. Right? Capital stock is basically production machinery, housing, and infrastructure. Now, a large part of capital stock is actually housing. So as India prospers, it needs to build a lot of housing. And I think that process, it will start where you're saying, that it will start with the upper income, because that's where the affordability and the ability to express their desire and implement it in a purchase is much better. Yeah. But then once you start building those houses and the economy starts to uplift, then demand starts to go in. But this is where I think the investment in urban infrastructure becomes very important. You know, Germany did not have a downturn in real estate after reunification. It's the first time they're having one. We have to understand how we can sustain it for 15 years instead of ending again in 5-7 years. And for that to happen, we need to dramatically rethink our urban infrastructure. But anyway, those are longer term issues. But it is not just about, you know, some rich people investing their stock market gains. It is actually a much deeper structural trend, which I think is now re-emerging.
Some rich people, not out here for sure, I must
But
say.
I would say definitely, you know, I am certainly not as good as number of Nilkant is, and I don't analyze so much. But I would say definitely among the circle in which I roam, there is an impact of stock market gains, because it's not only stock market. People are getting stock options. They're able to sell. People who are working in the company. It's not only the stock market. People are buying. People who are working in companies, they have stock options. They are able to monetize and they are able to sell. Generally, economy doing well, companies doing well. So generally, I think corporate sector is definitely contributing to the growth of real estate sector, I would say.
Interesting. Okay, before I throw it open to the audience, just one final question. Portfolio strategy, Mr. Kela. We heard you speak about being selective on PSUs. What else is top of your mind? Because I, for example, on my conversations with you, you maybe like some of the liquor names as well, small pockets, but this, that, etc. So what's the ideal portfolio strategy for you? We heard from Mr. Mishra.
Yeah, we've
What's yours?
spoken a lot about, you know, the common sectors, infrastructure, financial stocks. Let me elaborate my thesis on the liquor sector, because that's something
Maybe
which
that.
is not heard of. So we were doing research on China. You know, the company in China, Motai, has got $325 billion of market cap, right? They sell more than 600 million cases, and they make more than $10 billion of annual profit. And when I dig deeper, maybe the liquor profit all put together in China will be in excess of $15 billion. And when we total all listed companies which are listed in India, it is less than $1 billion.
The profitability.
Total profitability. You take United Spirits, you take all companies put together, the total profitability is less than $1 billion. Then, you know, obviously as a curiosity, we digged more deeper as to why is this the case. Because this is not like per capita consumption of Mercedes car that it can, if at all, there is more logic to believe that Indians will consume more liquor because we have a more younger population and we have demographics, etc., in our favor, right? So the real moot point, Neeraj, is that, you know, obviously this is subject which is controlled by state government. And there is tremendous amount of inefficiencies and corruption at the state government level. Take the number of Uttar Pradesh. In 2010, the total excise collection from liquor was around 8,000 crores. In 2017-18, that number improved to 17,000 crores. Guess what the number today would be? Aap ek guess karo na.
35, 50, I mean, I don't know.
50,000 crores. Actually 52,000
Not bad.
crores.
A round of applause for me, I guessed it right.
So I am just saying
kidding,
it was 6% of the Uttar Pradesh government budget revenue.
Wow.
Today it is improved to 10%, while the revenue itself is doubled, right? Because there was a big reform which took place in UP. Yogi Adityanath government came and they cleaned up the whole system. So the revenue going from 17,000 to 50,000 crore rupees. I think the same thing you watch. I don't know the time, whether it will take 1 year or 5 years or 10 years. But I can clearly see the direction. Because this is where the real big pot for the state government is in order to improve the revenue. And one state will put pressure on the other states. You see it is coming in Andhra Pradesh. You mark my judgment. Because we know for a sure it's a very big liquor market and there is a lot of reform which is needed on that subject. Once it happens, then, you know, in the neighboring states, the liquor becomes more expensive and smuggling starts from one state to other. That's point number one. Second thing, you know, in this business, once you make a brand, then your profitability is insane because your cost of production doesn't go up. The raw material is the same, 20 रुपए किलो का सड़ा हुआ चावल या 25 रुपए का जाओ. It doesn't change irrespective of what liquor you are making. You can make 500 rupees a bottle and you can make 5 lakh rupees a bottle. Raw material doesn't change. The processing time is only maybe in a draw liquor you need 90% alcohol, and in a refined one you need 98-99% purity, right? But it is only 72 hours of more processing to make the finest liquor. So your processing cost also doesn't change. So it is like a branded liquor is like selling a LV purse, wherein your cost will not go up, but your profitability will dramatically improve. Third point, now because India is accepted worldwide, could you have imagined an Indian company selling a liquor bottle for 5 lakh rupees a bottle and it getting sold in 35 airports in the world? Unheard of, right? So I think if you take a real structural view of, let's say, as I am willing to take of 3, 5, 10 years, this is one sector which will possibly do well. Again, I must say I'm an interested party and I've invested my money where my mouth is, and I'm a big investor in the sector.
And that's a fair disclaimer, so no problem. Well, I won't ask about what liquor they drink, but what I can do is we have about 10 minutes left for the session to end. I have some questions on my phone, but if people have a question to ask, we can okay, so in-house guests get the last chance. In-house people get the last chance. Let me first go to the gentleman on the last seat because he raised his hand first.
Is it on?
Please, short question I request.
Yeah, sure.
And please mention who is it for.
Anyone
and please
of
also
it.
introduce your name.
Yeah, my name is Mahesh Bhatt. I'm a cybersecurity investor and an investor in startups and stock exchanges. 10 years, Modi Sarkar, 400 par, enslaved media giving us a lot of headache last 4 months. And today we are in realization ki bhaiya 240 ya 296 par bhi marte hua hai. So, who is taking the responsibility of political and economical handshakes in media sector? And can anybody apologize to India for this sort of nonsense going 24/7 on Indians?
Okay. So this is, since it's not an investing question, I assure you I'll answer your question, but can I let the investing questions come up first and get that going, and then I'll talk to you about this for sure. Okay, there's the gentleman in the second seat, please, and then I'll come to you. Yes, please. Sir, yeah, please come into you.
I'm Chetan Damani.
Hello.
I was in State Bank of India, Investment Advisory Services. I am a great fan of Madhu Kela and even Nilkanji. For last 6 to 8 quarters, we are hearing on all business channels from all experts like you that IT sector will get turnaround in 2 quarters, next 2 quarters. But next 2 quarters doesn't come. So can you tell exactly when we can expect turnaround in IT sector and whether we should stay invested, invest more, or anything? If you can throw a light, please, sir.
I did not say that, sir.
I said general, sir, all experts.
So, in fact, we've been underweight the sector for a while, and there was a period of 3-4 months of intense pain because the stocks rallied a lot. But now we have seen very sharp cuts in earnings expectations, and the stocks have corrected again. But today they rallied again. I think, when there is a lot of money on the sidelines, they keep chasing some of these beaten down names. Fundamentally, there are 2 issues with the IT sector. So I don't expect a 2-quarter turnaround, to give you a simple answer. The first is that there was a period of over-investment that happened in the sector globally between 2021 and 22. Right? When if you remember, all of us thought that only virtual meetings will happen and everything will be digital and app-based and all that. So what is happening now is that many of these companies, Indian companies, are benefiting from or are getting these large orders. So everyone is tracking the order inflows and there's sign-ups, and they are extrapolating into revenues. But what is happening is that within those companies, there are a lot of project cancellations. So the companies are saying, oh, this is not necessary. And frankly, as the US economy slows down, so it is now starting to slow down, there are visible signs, I think the pain for this sector could actually intensify, is my view. The second factor is that they are starting to see more competition. So, with the rise of the global capability centers, as companies are becoming more and more comfortable with the position in India, they are becoming comfortable with Indian infrastructure and a lot of other things, they are starting to shift to India. So they are poaching senior people They're paying much better salaries. And in many cases, the negotiation is becoming harder because those guys are sitting in India and negotiating with you. So I think both of these are not easy to handle issues. And the sector is still expensive. See, it's a very good sector to be part of, high cash flows, professionally managed, very clean accounting and all of that. But I think the PE multiples are still too high for us to be of interest. And I don't think we are done with the cuts yet. So I think that there is another couple of quarters of cuts before things really bottom out.
And AI will make any
Sorry,
difference?
sir, I'll have to let other people ask
Same
the question.
continuity.
Okay,
AI.
30-second answer. Anything? Any impact on AI, either of you?
AI, you can see clearly, I mean, the reason you're asking is there is a clear risk that AI starts writing software. Frankly, I don't think it is going to be in a position to write software by itself for several years. You will still need supervision in the sense that it can generate the first draft of code and then you have to clean it up. And so if the company is careful enough, it can use it to enhance its productivity. So it can deliver more value with the same set of people. So I don't see that as a very large threat in the near term.
Okay.
Thank you very much.
Okay. I promised the young gentleman there. So one question to him. Maybe one final question.
Good evening, sir. My name is Anand Bhatt. Before I ask my questions, I humbly seek your blessings first. So I'm a self-employed equity investor and a derivatives trader. I'm currently 18 years old and I have high ambitions in working in the stock markets, be it personal trading or any field related to the markets. So, sir, this is not only me, but this is the young population in its own. They have high ambitions in growing in the stock market. So, sir, what advice or what guidance would you, as a big investor, suggest to us ambitious youngsters? Looking forward to it. Thank you.
Fantastic. First of all, congratulations. You have chosen the best possible career because I would say when I was young and when I chose the stock market, I did not have clarity. Today I have clarity. If I become young again, I will choose the stock market with much more conviction than what I chose 35 years back. So you have chosen the best field. It's the best field because this is the true business of businesses. Right? We're discussing 25 businesses. We can switch from A to B to C. If you get into any other business, then you have to stick for it for a long period of time. I think success mantras are same in any field. Do extreme hard work. Go meet successful people as to how they became successful. You have to knock the doors maybe 100 times, as I used to knock in my younger days. Read books. And develop your own opinionated personality. Yeah, don't go by all these tips and all. Madhu ne ye le liya, isne ye le liya. Otherwise, you will keep listening to this kind of thing only. Develop your own skill. You are young. You have 30, 40 years, and treat this as a long-term career. Don't try to succeed in 2 years.
So I'll be knocking your door soon.
Yeah, great. Any advice, Nilkant?
No, I totally agree. I think this is a fascinating place to work. This keeps you on your toes all the time. There is something to work on every day. There's always something to learn. It's very dynamic, and if you get it right, pays very well.
If you get it right, yes. The gentleman in the blue shirt, that's the last question, by the way. And I have one question from the audience. I'll be able to take one because we have to wrap up. Yes, please.
Yeah, my name is Rupesh Shah. I'm chartered accountant. My question is to both the esteemed guests. That what could be the biggest antithesis, and to your opinion, what is the probability?
What is it? Antithesis?
Yeah, for the India growth story, the narratives which we right now about the political equations and the things can go as, will not derail. What could be the antithesis, the one antithesis, and what is the probability to it to your mind?
So, if I may summarize, you're asking what can bring down the market. So I think that, markets are never without risks. One very clear and big risk that I see is what's happening in the US. We've been flagging those risks. I think those risks have not yet played out, but we know that they will at some point play out. The US's choice of shifting from a loose monetary tight fiscal policy to a loose fiscal tight monetary policy will have its own costs. As the economy slows, and it is starting to slow, we are seeing 10-year bond yields fall, the stock markets are bumping up. but the risks that emanate from a slowdown in the US right now are going to challenge some of the very basic tenets of the financial markets. So that's something that is on my mind as I think about it, because whenever that happens, there can be a very sharp correction in markets globally. However strong we may be, we are still connected to global markets, and I think there would be uncertainty. I think there are several uncertainties that can emerge from, fiscal mismanagement at the state level. So we are seeing, India as a democracy faces challenges which no one else has seen. So the first thing is that we are trying to develop into become a developed economy as a democracy. Remember that there was no universal franchise even in the UK till the First World War. So most countries have developed when they were not democracies. We are an inevitable development that occurs when you start growing your per capita income is a rise in inequality. You could handle that in China. You could handle that when you were the form of democracy that the US and UK were running. I don't think India can afford that. So I think there will be significant political challenges. And that at the central level, I think for the next 5 years we are set. But at the state level, you could start to see, like what's happening in Karnataka, that 50,000 crores spent and there's no money left to do anything else. So there are many, so how the political system sort of grapples with this rise in inequality and the public discontent is going to be a huge challenge for us as well. Something else to add?
I would say, on the economic front, there's one significant challenge is unemployment, because these numbers are rising and it's becoming to my mind, it is becoming a real issue. I don't know whether at what point of time it starts to play in the markets, but it's a real issue. The other thing is the valuation itself. You don't buy the market. If you buy real euphoria and you buy, what is really in fashion, that is the biggest risk, because you lose money not in the market, you lose money in individual companies, right? So as long as you are able to avoid that greed which arises because of the lack of feeling, then you will be okay.
Okay. Alex, with your permission, there's a lady who has come all the way and she told me before the event that she wanted to ask this question. Do we have time for one more question? Okay. I have a question from two gentlemen, Sanket Mehta. Sanket, sorry, I can't ask your question, but I'll promise you I'll ask them after the event and say it on TV on Monday. But, okay, the lady back there. Yes, right here. Can we give the mic? We'll have to make it quick though, because we are over time, please. Yes?
Yeah, hi. I'll just go straight to the question. So, sir, you've been repeatedly saying that, the biggest fear is we shouldn't get old before we get rich. And how do we kind of counter that? We get more women in the workforce. We double up. We become the world's back office for higher skilled jobs. We are still on the the initial, per hour rate. So a combined question, seeing the current dynamic, we are anyway looking for a welfare kind of a, package which looks like welfare but actually does a lot of groundwork. So what policies do you see coming forward, like we did, Har Ghar Jal, we did rural electrification, we did, all this gas, which actually is a very growth thing, but also comes across as a welfare, serves both.
I get that. So, and I think that's a very important question because we cannot be satisfied with 7% growth, though we get it, and we need to sustain this for 25 years. And so we need to continuously challenge ourselves as we look at China from 78 to say 2015 or even now. Every 4 or 5 years they've gone through gut-wrenching reforms where the economy could have struggled really, and we also need to keep doing that. The most important ones you've mentioned. But we need to keep building on that. So we've solved the problem of, say, electricity access. We've solved the problem of water access. So we are supposed to solve that, toilets and pakka ghar. But our cities are still a mess. We need to significantly improve urban infrastructure. This is what China has done wonderfully well. A very large part of capital stock in any developed economy is housing and infrastructure. And while we have managed to do well on the connections between cities, roads and highways, railways, we are struggling to do urban infrastructure. So I think that has to be done. We, at some point, really need to think about the structure of the government. I think the government is built for what was required 30, 40 years back. I don't think the current government structure is capable of withstanding the kind of industrial policy shifts that we are seeing in China, in the US, and the world over. So we'll need many more dramatic changes, and I hope that as the dust settles, we start to build a consensus towards that again.
Can you name any one?
All right,
like,
sorry, but we are completely out of time, so we'll have to leave it at that. The two questions for Mr. Madhusudan Kela is what I will answer on TV, because we're really out of time, but the questions were around you having cautioned people around railway stocks. Is that, what's the status now? And in some platform you had spoken about autos. What do you think about after 4 years of a rally, can they continue? But we are so out of time that I'll have to wrap up the session here. And I'll ask you after the event and speak about this on TV on Monday. But gentlemen, both of you, thank you so much for joining in today.
Thank you, Neeraj.
Really appreciate your time.
Thank you.
Alex, over to you.
All right. So this is an outreach for investors, and the reason that we wanted to hear from Amitabh is because right now this is the one question that every investor, I think every Indian has, that what's going to happen in the next 24 to 48 hours. In fact, Amitabh, are you feeling a little insecure nowadays? Because you're a political analyst, but right now everyone is a political analyst.
Everyone in India is a political analyst and a stock market expert. So that's fine.
So, you know, with that hat, since you're a political analyst who seems to just get it right in terms of what is going to happen and the way things could pan out, we thought, you know, we're going to keep a lot of Q&A through this because I think it's interesting to hear what people want to know. But I want to ask you that right now, everyone's very angry with pollsters. And then there is one set of people who are saying, लेकिन मैंने तो बोला था, आप कौन सी कैटेगरी में हैं?
पोल्स तो मैंने किए नहीं थे, और जो मैंने जो बोला था उससे भी नीचे आया नंबर, तो दोनों ही कैटेगरी में नहीं बैठता हूँ मैं.
Okay, yeah. So you didn't get it completely wrong like a lot of pollsters.
Because we have discussed, I mean, the numbers with you, and the results are stress case of the stress case sort of correct. So we were discussing 300 to 350 at one point of time, stress and base. But the numbers are 293, so it is even lower than the stress case, which I had estimated.
Okay, so before we get into what next, I think we should take a second to understand why. And I was listening to, you know, some of the excellent comments in the earlier panel. I'm going to start with what Neelkant Mishra has said, that, and he called it lazy analysis. That the lazy analysis is that the poor, the underprivileged, did not vote for the BJP. This was a vote against growing inequality. And that's not necessarily the case. And he gave a lot of examples of many states where the BJP has done well. What is your assessment?
See, essentially what has happened in this election is that for any incumbent government to contest a localized sort of an election is very, very difficult. So since there is an absence of a national narrative this time, particularly in some states and largely two states, which is UP and Maharashtra, due to various reasons, the elections have become fairly localized. Now, if you see 2019, 37% of people voted in the name of the Prime Minister. And for 25% people, the local candidate was the most important voting consideration. So when you ask why did the pollsters go wrong? So opinion polls go wrong because by the time they were shadow banned, most of the candidates were not announced by parties. I mean, by the phase 1, opinion polls were stopped. And by that time, most of the parties are not announced candidates because of phase-wise election, 7-phase election. So opinion polls tend to get it wrong because the candidate name is not there. Now the strategy of the opposition was to make this election localized. So how do you localize a national election? Which means that you expect lesser number of people to vote in the name of the Prime Minister and more number of people to vote in the name of the local candidate. Now this time, only 26% people have voted in the name of the Prime Minister, as per CSDS data. So the contest became localized. It moved from the Prime Minister to the local candidates. Now the Indian elections is essentially an aggregation of state election results. It's an aggregation of state election results. Even in 2019, when BJP came to power, it had lost 10% of the seats it won in 2014. Which means 10% you can say is a max out loss, because the same situation prevailed even this time. And they gained 50-60 seats to make up for those losses. This time also it was widely expected that they would lose seats where they have maxed out, which is largely your Hindi heartland and the western region. But they could compensate for it in the eastern and southern regions. Now this time they have lost 30% of the seats they won in 2019. So the 10 has become, it has become 3 times of what the trend was in 14. And in terms of gains, they've not even gained 10%, because the gains were to come up from where? Largely this time the gains were to come up from only 4 states. UP, because of Ram Mandir inauguration, the party felt that they have a chance to increase seats or improve their position. West Bengal, Odisha and Telangana. These were the only territories where the party could have gained significant number of seats. They have not been able to gain in West Bengal. They gained in Odisha. They gained in Telangana. But they were not even able to hold on to the UP tally. So if you add the loss of UP, which is 29 seats, to the tally of BJP, which is 240, they are largely, they would have been at majority. So they lost in their stronghold or fort of UP because of many factors which we can discuss. Largely it became a fairly localized election. Maharashtra was also expected that it had become a very localized election, and they suffered losses.
Okay. Now, we can go on and on about the post-mortem of the results, but the fact is that we're looking at a third term of NDA, historic by any stretch of the imagination. We're looking at a Modi 3.0. And the question now is, how will a coalition move forward? Let me put it down very simply. नीतीश बाबू रहेंगे या फिर से पलट जाएंगे? यही सवाल है. Chandrababu Naidu ji, when will he ask for his pound of flesh, and will the BJP be able to give it?
So, if you see what is the message in this mandate, the message is that this Indian democracy is thriving. The voter is always ahead of us, is very wise. And the EVMs are not rigged. They are working fine, perhaps. Because one of the ambassadors messaged me after the election. He said that I think that the doubts about the democracy of India is highly exaggerated.
I think one round of applause for Indian democracy.
Yeah.
No matter what.
So, democracy is thriving. Loktantra ki vijay hai. What is the message of this? One is balance of power. Satta ka santulan bana rahe. So that's why we are seeing that BJP has a majority, but it needs to depend upon regional parties, and federalism is one of the basic tenets of our constitution. So the regional parties will have a role. Stability. How does stability come? Even today, BJP tally is almost 2.5 times of Congress party. BJP's tally is more than all the entire India bloc combined. So BJP continues to remain at the centrality of Indian politics. It is the central pole of Indian politics still. Now, when we talk about continuity, if we compare with previous coalition governments, 1999, BJP had 180 seats, and in 2009, Congress had 200 odd. So at that point of time, the dominant party was almost 80 to 100 seats short. This time, the dominant party is 30 seats short. This is akin to 1991, when Congress won 244 seats. And the entire paradigm of change in Indian economy was done in that period. It was largely because the dominant party was not fairly short, not significantly short of the majority. So, I mean, Manmohan Singh, the father of the economic liberalization, did all his reforms in that period. So now these three things are there. Now, automatically, when there is a coalition government, there will be pulls and pressures. It is bound to happen. One cannot deny the fact. Now, Nitish Kumar, and also it is a pre-poll alliance. It is not a post-poll alliance. So pre-poll alliance generally tend to be fairly stronger, you can say, than any post-poll arrangement. Now, Nitish Kumar and TDP will extract their pound of flesh. That is for sure. However, Prime Minister Modi is a very flexible, adaptable person. Now, what he needs to do is that he shares a great rapport with global leaders. I mean, we've all seen. Now he just needs to replicate that experience which he shares with global leaders across the world with two of these key people, which is Naidu and Nitish Kumar.
So I'm going to ask you about that. Prime Minister Modi has not had to work in a coalition till now. Even as Chief Minister of Gujarat, there was always an absolute majority, a brute majority. But you're saying that doesn't matter.
No, I'm saying that doesn't matter, that matters. But I'm saying that change is the only constant. If he has to remain in power for the next 5 years, he has to be flexible, he has to be adaptable. Correct. And these partners have worked with BJP for a long, long time. It's not that they have not been allies with NDA or BJP. They have been in and out, but they have been in friends for a long, long time. So I think TDP's genesis is also anti-Congress because TDP was born out of anti-Congressism in Andhra. Janata Party or the Janata Dal United also largely, if you see the ideology, have been anti-Congress. So ideologically also they seem to be fairly aligned. But of course there will be pulls and pressures and they will demand for certain ministries. Fortunately, you can have 80 ministers in India. Quantity is not a matter. You can make, for every 3 MP, 1 cabinet minister, you can give very easily. That's not a problem because they have 28 seats, so 10 ministers perhaps. The question is about the quality of the portfolios, correct? So whether they have a say in the top 4 positions or they have a say in maybe the other railways or on agriculture or commerce or industry sort of. So that we have to see how this pans out, how the negotiations pan out. But PM Modi is working at a lightning fast speed, you see. So everything has been done, letters of support has been given, and the date has also been announced for the swearing in. Because the BJP or PM Modi does not want to leave anything to chance. So they are working at lightning speed. And there are 18 others have won, out of which 7 are independents. Out of that, I think 10 have already given support. So 303, that original number of 2,000 has already been achieved, sort of.
Okay. So, we can go on chatting, but I think since we have limited time in this panel, we'll open it up to questions, if any. Everyone wants to know what the next few days will look like. Yes, this gentleman here in the pink shirt. Yes.
Hi, this is Prashant Tapse from Mehta Equities. A right question to a right person. What went wrong and what is the lesson we are going to look at from these elections?
See, again, as I said, the elections became localized in 2 states. Maharashtra, what went wrong, we all know. We are sitting here in Maharashtra. 2/3 of BJP's vote is the core Hindu ideological vote. And 1/3 is the neutral vote. The core cannot win any simple majority for the BJP. It has never. Non-core provides the lead to the BJP. Now, but they are also conflicting vote blocks. If you woo the core, the non-core goes away. If you woo the non-core, the core goes away. That's why that's what the dilemma was the BJP faced when we saw statements from the Prime Minister on religion, etc. To woo the core or to woo the non-core. Then came the statements on redistribution of wealth, etc. So largely, if you see, if you remove UP disaster, they would have had 269, 270. Now, Arvind Kejriwal, when he came out of jail, he made 2 statements. He made Modi will not be PM. He will retire after he attains 75 years of age. He said Modi and Amit Shah will replace Yogi after elections. Everybody came out and countered the first statement. Amit Shah, Nadda, Rajnath Singh. BJP officially did not counter the Yogi statement. There's no statement made by anybody with respect to Yogi, and that perhaps has led to some discontent in UP amongst his caste community members, and the elections became fairly localized. If I give you another example, BJP replaced 50% of its MPs, excluding UP, in the rest of the country. In UP, they renominated 55 out of 62 MPs. 55 out of 62, which means the natural anti-incumbency against the local MPs also played a part. Again, there are many 3-4 other reasons also because of caste consolidation, etc. And this narrative of the opposition that if BJP comes to power or attains 400 seats, they would change constitution and end reservation. This has reached the SC/ST reserved seats, wherein also the BJP's tally has declined by 20 plus seats. So largely these 2-3 are the reasons why this mandate has.
Was this come. Overconfidence by every party? The BJP was overconfident. Even markets were overconfident.
No, see, there are 2 ways to look at it. One is if you remove Nitish Kumar and TDP from NDA bloc, because they were actually, Nitish was in India bloc, and TDP was in discussions with Congress to form an alliance. They changed the mind only after Congress lost 3-0 in the Hindi heartland states last year. So if these 2 parties would have remained there, today India bloc would have higher numbers than the NDA. So I think the BJP leadership was aware of this situation that they are around 220-ish. And that is why these 2 strategic alliances were done in the last 3 to 4 months. That is why this Nara was given of 400 to maybe divert the attention and trap the opposition to another narrative.
Yeah. Just talking about the alliance right now, Amitabh, and I think this is what people are overlooking. Correct me if I'm wrong. The key leaders in the alliance, especially Chandrababu Naidu, prides himself as a reformer. That's been his calling card. Nitish also has always tried to build an aura of someone who's moving towards the development of Bihar, of his state. So even as you talk about the pound of flesh, do you think that what the markets can look at is that these 3 men will have a lot more in common than is assumed right now?
No, these 3 men have a lot in common because, they have had or they have been CMs for longer tenures, both Nitish and Naidu and now Modi. And all their stakes are intertwined now. Nitish Kumar also needs BJP to continue as CM in Bihar. Chandrababu Naidu, again, pro-reformist, also needs BJP for a transition of power to his son in his home state. So regional parties, because these two leaders are at the fag end of their careers, a power transition is likely to happen in the next 5 years in these parties. And they need the support of BJP for a smooth transition of power. We've seen transition of power in regional parties is a very complex exercise. Here also we've seen how complex it can become. So this gives some sort of leeway to the BJP also to keep these allies together. And of course, as you said, common agenda is that India becomes the third largest economy in the third term and a developed country by 2047. I think these three leaders share the same vision with the Prime Minister.
I think that's an important point, that the vision is similar. Yes, this gentleman here.
Good evening, sir. Good evening, ma'am. So my question is, what approach BJP will follow? Like, they will continue to give favoritism to Gujarat or Madhya Pradesh, or they'll try to regain UP and Maharashtra's confidence, or they'll bow down to Andhra and Bihar because of the coalition?
Favoritism as in, see,
because of the seats, looking at the seats.
So now the UP election is 3 years down the line. So now the bigger election is here itself, 6 months down the line. So the focus has to be to somehow retain power in Maharashtra. That's going to be the key. And Haryana and Jharkhand also, they have not had significantly great results. So those two states also. So these 3 state elections will be key. The alliance partners, all parties will be watching at the results of these 3 state elections also. How do these pan out? But of course, as you were saying, that there could be a change in approach, because now they have to they are fighting battles at 3 fronts. One is an organization, because now a beef up of organization has to happen because they need to win states. Then there is a battle with the parent, which is RSS, which needs to be now settled, and a more amicable working relationship needs to be established. And then, of course, within the government, because it will be dependent upon allies. Correct?
Do you think Uddhav will move?
Uddhav will move or not, but one round of flip-flop hopping is pending in Maharashtra. Whether it happens before elections or post-elections, very difficult to say.
flip, किधर का flop?
अब ये तो कहना बहुत मुश्किल है, अब कहाँ का flip, कहाँ का flop, तो बहुत मुश्किल है. ये तो मैं उद्धव ही बता सकते हैं.
Okay, I think we're pretty much out of time. If there's one last question to that gentleman there. Sir, आपका पहला का सवाल
नहीं वो question नहीं पूछ रहा.
Take it forward.
No. I'm not asking you. Don't worry on that. It's purely political and factual. I'm really surprised why none of the media has highlighted. And I feel sad when Nitish Kumar is being continuously told as a Paltu Ram by many junior journalists. Okay, 2 days back, Tyagi personally told that as a convener of India, he initiated the get-together of all India alliances, 30 plus parties, each one with loads of ego, from Rahul Gandhi to Stalin, from Sharad Pawar to Mamta, okay? There is a humble guy who connects everybody. It's a lot of energy and a lot of experience. Nitish was sidelined, humiliated, insulted.
Sir, सवाल क्या है?
No, so this is a fact which none of you people say कि Nitish was, this was India's mistake of missing an opportunity to get Nitish on the leadership post.
But has he flipped and flopped or not?
See, these are details, ma'am. Look at his history from 72. Okay. You people are talking about 2 years. He's from 72. JP ke zamane ka hai.
No, I agree.
Possibly you were not born. 77.
I take your point that he's a very astute politician.
That Nitish is a good administrator. He was with Bajpayee. He was chief minister with an experience who can compete with Modi. Modi and Nitish still compete, but they are also friends. And second challenge which you people missed was Mamta Banerjee. Another state-level super leader, didn't take India into Bengal for her petty gains, lost Indian opportunity to become a prime minister. And thanks to them, that Modi has come. Why are you not covering these elementary facts?
Okay, I think the takeaway is that while we're looking at, because the expectations were of a clean sweep by the BJP, and actually no one even considered the India alliance to do as well as they have. One would say perhaps even they themselves were a bit surprised. But the point of the gentleman is that there were many mistakes made in the formation of that alliance as well. And that perhaps, if I take it forward to the fact that today they are not a threat and they're not trying to form a government, they're not staking any claim, they're not trying to break anyone because they know that they aren't ready.
So we discussed that if Nitish and Naidu were part of the India bloc, the result would have been entirely different. What Sir is trying to say is that if Nitish is a Palturam, perhaps BJP, which has accepted him, is also doing a Palturam. Correct. That's a fact. He is not Palturam. Even BJP is a Palturam by that logic. Even Tejasvi Yadav is a Palturam by that logic. Now, when we are discussing about Mamata, I think we missed that. BJP also could be in discussions with the previous allies.
Including
like Mamata Banerjee is an ally of the NDA from 1999 to 2004. Even DMK was an ally, National Conference was an ally, Akali Dal was an ally. So we will see how this pans out. I think they should be able to handle it. We'll see how
Okay,
how
so
it works.
suffice to say, we have a stable government, but an exciting 5 years to go. On that note, thank you so much, Amitabh, for joining us today.
Thank you. Thank you.
Thank you. Fascinating conversation, and this is something that I'm sure all of you are discussing at home as well. Hopefully, this has given you a little bit of ammunition to take home when you take this conversation forward. Now, in the equity markets over the last couple of weeks, I'm told that it's been a very tough time for the trader. There have been squeezes to take care of for the short sellers, and there have been traps to take care of for the bulls. And the real thing is, and I have heard this said very often from people that are veterans in the trading landscape, is that you limit the number of mistakes that you make. And to that end, I think there's nothing better than this next panel to prepare you to make fewer mistakes, to tell you how things are right now, how things are likely to go, and basically to lay the context for you when you head back into trade tomorrow and next week. Let me introduce the panel to you. I've got Gautam Shah of Goldilocks Research, Dr. C.K. Narayan of Neo Trader, and author and technical expert Kush Bora. Thank you so much for joining us. Please join me on stage. And to chair this panel, please also welcome Samina Nalbala.
Hi. Thank you, gentlemen, and thank you, audience. So, we started the fundamental conversation by, I think Alex talked about how mutual funds said that they saw record inflows. Investors were waiting on the sidelines. When you're buying for 5 years and 10 years, the story is very different. We also know that it's trading last week or this week was not for the faint-hearted. If you're a trader, it's more than likely you've lost money. Now, just for the sake of predicting, and because reading charts is truly a science, right? And I'll start with you, Dr. Narayan, first, because you've got 4 decades of experience, veteran of the Lal Street, and you're a very well-known columnist as well. And you put this out a few weeks ago. So I don't know if our viewers know, but Dr. Narayan puts out an annual prediction at the start of the year. And at the start of 2024, he said that Jan to June would see a slight uptick. June would be a tough month of consolidation. And July to the end of the year, we would resume an uptrend. You want to tell our viewers and our audience how things are going to look from here till the end of the year? And of course, if 50,000 could be a reality in the next 5 years.
Well, we all wish 50,000 becomes a reality, no doubt. But insofar as the annual projection is concerned, which I did on the channel also, it's worked out pretty decently so far because the market has been moving up. At least until May we had this projection. Now, as you mentioned, I did have June and a little bit of July as consolidating months. And the turn of events has been such, so, and subsequent to July, end of July, I also see the market moving up. And this is a cycles-based forecast that I make every year, and I've been making this for past couple of decades. Pretty much it comes out reasonably well, mainly because cycles dominate human behavior, right? And market is nothing but an expression of human behavior, human thought. So cycles may change now and then, but they pretty much hold their own for a long period of time. And in this year, the only change from other years that we had this major event, which was the election. So, but the cycles for 2024 were so clear that even a major event like this, and it has turned out to be a pretty major event because it was so out of expectations. Writing in the letter, for last week, I had mentioned that lead up to the election was a little hesitant. So people were hesitant going into the election, but the exit polls simply clobbered everybody and changed their idea about what is ahead. So they flipped around from uncertainty to complete certainty. Now we must see this in the context of the lead up of the whole market, which has been going on for about a year or two. The strength market. All that was based upon a sense of certainty of the trend, largely owing to the clarity of policies and trends, etc., because of the Modi government. Since the expectations were also that this government would continue, and the exit polls made that into a complete certainty, the results were totally antithetic. And I think that is what produced a huge shift from certainty to doubt. And I think CLSA has a report out on this, which is, I think, titled that we have moved now from absolute certainty of the trend to lots of questions about the trend. No doubt the swearing in of the government and all will pacify a lot of that sense of disquiet. But I think nagging questions will still remain in people's mind, which will prevent such a strong move to be seen again in the second part of
So do you feel like it could be range bound between July and December, or
No, not range bound between July and December, because the cycles are very clearly up.
Okay.
And I do not see any hindrance to that cycle as yet. Yes, June and July, the event that has just transpired will certainly, or has certainly, created a sense of uncertainty. And during uncertainty, the market does only two things. Either it consolidates or it declines.
Okay.
It never goes up. For it to go up, new money has to come in, new conviction has to come in, and a lot of people, including individual investors who are pumping money in SIP, have to develop a sense of certainty about the trend again, about the markets again. Now that, in my opinion, most people, small investors, medium size or large funds, FIs, anybody, any participant, they will wait for some documents to come from the government which will indicate a pathway of how things are going to roll out. I think the first of those documents will be the budget. Now, we can reasonably estimate that the budget will be somewhere between 15th to 30th of July.
Yeah.
So I don't think till we reach somewhere around the middle of, say, middle of next month,
will resume.
We are not going to have anything but sporadic rallies, which will also see kind of pullbacks, which is typically what we call a ranging market.
Right. Gautam, like I said, right, everybody bought lock, stock and barrel. On Monday, option data was indicating to 24,000. Those were calls that were active. Suddenly come Tuesday and 22,000 was threatened. Did you go out and tell your clients to buy? Or did you indicate and pick up on a breakdown of trend and suddenly turn bearish?
Well, I was as consensus as the people of the country were, to be honest. So when it came out on Monday,
I was also pretty much swayed into believing that all's well tomorrow. But I thought
we were forced to believe that.
Yeah, so that's the reason I use the word swayed.
Yeah.
Because it seemed as if, all's well the next day. But I do believe that market's reaction was very emotional that day because market did not expect something like this to happen. So it just corrected. But I think what really happened in the last couple of days is a very mature comeback by the
reaction.
markets. Because the market believes that, this is done and dusted in some sense for the next 5 years. There is going to be policy continuity with challenges, which I think is a good place to be in because you want the current government to be on check. I'm sorry, I'm a technician, but I'm, putting all of this in. But the way I see the market set up, I think we've handled some amazing challenges in the last 1 year.
Yeah.
Elections, geopolitical developments, the fact that Fed is not going to, reduce rates anytime soon. So all of these challenges have been handled really well. And for the last 5 months, the Nifty's actually gone nowhere. We started the year at 22,000. Till 2 days back, we were at 22,000. So I think this is a very mature kind of market that we live in. And mind you, 20,000 crores of liquidity has changed technical analysis. I have seen 2003, 2007. We had 2 down circuits in that bull market when the Sensex moved from 3,000 to 21,000. That's 2004 when BJP came to power and 2006. But in this last 3 years since the COVID rally, volatility is not there. You have India VIX trading below 20. And there is frantic sector and segment rotation that has continued. Had the domestic liquidity angle not been there, this market would have done very different things over the last 3 months. So the way I see it, we've handled challenges really well. The charts are in great shape. I don't think this is about the Nifty. This is about stock. It's going to be a stock pickers market over the next 6 months. And I think the key takeaway for your viewers might just be that I see a lot of underperforming sectors and stocks coming back.
Oh, okay.
So
if you were to initiate a trade, the trade would not be on the index, but it would be on stocks or maybe sectors. Is that a fair assumption?
See, it's easy to talk about when 50,000 on the Nifty, but please mind you, every 6 months the world is changing.
Yeah.
You can't look 1 year beyond. I mean, in our own lives, you don't know how unpredictable
No, and
it
we
is.
saw that. Monday, Tuesday, Wednesday.
Correct.
3 very different days.
Correct. So I don't think it's going to be about the Nifty. Also, if you look at the Nifty PE, you are at 21. So there's no way we are expensive. And if I actually look at the charts, I believe it's going to be very sector specific and stock specific. And many underperformers like HDFC Bank, which have done nothing for the last 3 years and currently trade at an 18 PE, I feel will make a very serious comeback. Not a recommendation, just an observation. So I think there's going to be huge segment rotation from the mid caps and small caps, which were very richly valued and very overbought on the charts. I think the focus is now going to shift to the large caps.
Okay.
And Nifty might not do much, but then stock pickers market is there and you can still make serious amount of money over the next 6 months.
Krish, you want to come in on that? We keep talking about, it's about finding opportunities, right? And over the last couple of weeks, or rather last couple of months, we've talked about how if you've got to rebalance your portfolio, you may want to look at a market neutral strategy where you move from the broader markets to large cap stocks. Do you feel the same? Do you think that the next leg of rally will come from the frontline names?
So first up, let me start with a very important line that Gautam made, that anything that we're discussing here is just for educational purposes and not a recommendation.
No, we need action in this as well.
Let me start off with that. No, but I don't entirely believe that. And see, the SIP numbers that we're talking about are, extremely significant. Every new money that comes in, I don't think is going out and chasing an HDFC Bank and a Reliance, because for us that story is done and dusted. And maybe the stocks have not done much, right? But for us, it's a done and dusted story. What's the question that we ask whenever we go out and buy something new or we've got money, right? Agla HDFC Bank kaun sa hai, right? So where is that money going? I sincerely believe that even for the next 10 years, the mid caps are the place to be and they will still outperform. Now, let me also take it from a slightly different perspective. Just 2 days ago, the significance of having a balanced portfolio was highlighted. All right, no one was touching FMCG names. Now suddenly everyone wants to buy FMCG stocks, correct? Why do I highlight that? It's because when you're making a portfolio, you have to make one for all seasons. So your HDFC banks and Reliance Industries of the world have to be a part because you need them at least for stability, if nothing else, correct? But where does the extra return, that alpha really come from? It will come from mid caps, and for the next 10 years, it will continue to do so.
Very fair point. You want to find the next front line, right? Because a mid cap can become a large cap and large cap can't become an extra large cap. Dr. Narayan, PSU stocks have been such a talking point. And I mean, case in point, up until Monday, we were all so constructive on defense, railway, anything with any sort of policy continuity was a clear buy. Fundamentally, technically also they say you bet on strength, not on weakness. So those stocks were doing well. How do you feel about this space right now? Do you feel like PSUs, PSCs could still lead the way, and the current time is a good opportunity to buy these stocks, not for 5 years, because it's always easy to make a 5-year call, but between now and maybe the next 6 to 12 months?
The thing with PSU entire basket is that it was a shunned area of the market in the past, right? Nobody wanted to own them. Nobody meaning nobody. And then this Modi government did various things. Introduced PLI schemes, introduced policies, changes, revamped the outlook for this entire space. And suddenly this whole space became attractive, and it moved from being a shunned sector
To a love sector.
to a loved sector. Now, when a movement like that happens, there is bound to be some excess which will creep into that sector. I think that is what has happened. Even right into Monday, or let's say particularly on Monday, there was this feeling that we must own all the PSU stocks because they are the Modi group stocks, right? Prominent among them. So there was last minute buying also into the PSU stocks. There has been continued buying over a period of time, and they have delivered multiple times, so nobody let go. Because selling out of a PSU stock, railways, defense, whatever, and they were all giving fat dividends anyway, the Coal Indias and the IOC, BP and all of the world. So it was like a good time, any which way you look at it. Now that there is a question mark of the sustenance of this government and its policy, or we may debate till the sun comes up or goes down.
That's the beauty of
about
politics,
that,
right? Yeah.
that possibility. But still, if you ask anybody, are you as gung-ho as you were last week or last month or 6 months ago about PSU stocks? I'm sure the answer would be no, or a qualified yes, or in any which manner. When that happens, everybody who was bought into PSU stocks except those who did in the last week are in the money. So when some kind of uncertainty hits, the first thing that people do is take profits on the stocks where there is a truckload of profits. So that kind of pays for your patience, your investing, your returns. It pays for the losses that you kind of incur in the shorter term or near term investment. So everybody feels a bit whole, right? I've not lost money, I've made money, my PSU basket saved my skin and all that. So I think all the PSU stocks got hit by that sentiment. I don't see that sentiment coming back in a hurry.
You mean the sell sentiment? Or
Yes.
the buy sentiment?
No, the buy sentiment.
Okay.
Right? They're not going to sell out big time because, HAL keeps getting orders up to yesterday.
You're right.
Right?
RBNL got orders.
Yeah,
today as well,
and then
so
a BEL gets orders and everybody getting orders. BHEL is doing well. So there is sufficient good news flowing in that. So I don't think anybody is going to come and sell beyond that panic point which we saw on Tuesday.
Okay.
That has done enough damage because there was a lot of leverage position even in that area. Okay,
But do those stocks look good on the charts even now to buy after a 20-30% fall we've seen?
No, I would not really buy them. I would trade them.
You would trade them?
That's it. So I would trade them for very short cycles.
How do you define short cycles? A few
Well-
days? A few hours?
No, that is too much of a short cycle. That's a kind of scalper's zone. But
so you're not a day trader recommendation.
But I'm happy to be a day trader. I'm happy to be a positional player also. But then the thing is that when I say short cycle, I would mean something which runs beyond, let's say, a couple of weeks, going down to a couple of months.
So maybe
not
a
much
quarter
beyond
at an
that.
average. Gautam, that brings me to my next
Sabina,
question.
if I may just quickly come in on this one. I think I'll approach this question, the PSU question, from two different lenses, because this is a burning question to everyone, right? See, for me, broadly, as we speak in the corporate, right, the story, the fortunes change when either the story changes or the storyteller changes Now, I think we're fairly sure that that's not happening, correct? On the government front, on the PSU front. So I think that continuity will still be there. Second is the point that a lot of fund managers included, right, missed out on the PSU rally even till the last end. In fact, I remember, when we were on air on Tuesday, some of the fund managers said that, I will still not go out and invest. I hear sir also saying that, perhaps this is what will fuel the next leg of rally for PSUs. So I'm not saying I am pro PSU as a whole, but if there are these names like, SBI is a pretty easy bet, I suppose, right? Perhaps even a BDL for that matter, stocks that we've been discussing, I would still go out and buy them.
At the current price, or you'd wait for a further dip?
No, that's exactly my point. We were all waiting for a dip because we all knew they were expensive.
Nobody can ever time the market. Let's also be honest.
But the market's done what it would have in 3 months in a day's time.
In a day's time. So,
we live in the age of instant gratification, right? I mean, even markets, who knew?
Yeah.
But that's exactly what has happened. So I'm still constructive on PSUs, maybe a little selective.
I'll come to you for the next HDFC in a minute. But Gautam, and I think I'll take a cue from Dr. Narayan. What traders, investors alike tend to do is you take profits from the stocks that are doing well. You very rarely cut your losses. And I think that's the biggest problem, right? If you're spotting a stock that's 5% lower, you will not get out, hoping for the best. Usually it turns out to be wrong. You will lose more money and that's the end of it. How critical is this space in terms of a trading strategy today? Would you buy these PSU stocks? Or if you've made your money, you check out, don't look at them again, and maybe bet on an HDFC bank, like you said. So rebalance for me. Where would the bias sit now for you?
See, I think it's important to understand the market environment. Certain bull markets are like test cricket. You don't do much. You're just there on the crease, taking those singles, and make serious amount of money over many years. If you try and play T20 on a wicket, which is for test cricket, you don't end up creating wealth. Yes, there is entertainment, there is some income on a monthly basis, but there's no real wealth.
It's just cash flow.
Absolutely. So I think for the last 3 years, it's been a period where you could have created serious wealth. And I think as a technique, I have always used a simple moving average in many of the stocks. Because, you look at a Tata Motors or the HALs of the world, use a simple moving average, have it plotted on the weekly chart. Till that average does not break, you stay in the game. You'll be amazed to know that you would have actually played 5x, 6x without averages being broken. But coming back to your point on PSU, I think for 6-7 years they were under-owned, under-analyzed, and not understood.
Not understood.
Right? And they were all trading at levels of 4-5 PE. And when I used to have discussions with my analysts, the talk was at some point of time it will show up on the charts. And they showed up. And I think the market is very forward-looking. So all the positives that we discussed today about India and PSU for the next 2 to 3 years is already in the price to a greater extent. And now I think the men will be separated from the boys even in the PSU space. So there is one basket of seasonal names which are defense and railway. And there is other basket of PSUs which I think are structural and are playing the India story.
So those would be banks, I'd imagine.
They would definitely be banks. I think SBI is right on top of
so
our list.
So HDFC, SBI, we're listing down stocks as we go along here as well.
There are few other PSU names just as an observation because we just like them from a longer term perspective. The likes of Power Grid, NTPC, NMDC. You just can't go wrong with these names because these are the names which are building India today and it's showing up on the charts. But the ones in the defense and railway, I'm not a big fan. I think it's overbought. As a technical analyst, I see negative divergences everywhere. I don't think you should be committing.
You said how charts can predict what lies ahead.
Yeah.
Recently, we've seen consumption come back. In fact, Monday, Tuesday, we all saw what happened to please, Dr. Narayan.
Could I just add a word to what he said about the longer term, how he approaches it, etc. Now, the thing is, bull markets have cycles. Indian markets, they average about 4-5 years. Bear markets average about 2-3 years. Every bull market has a leader sector.
Yes.
And there are times when a very strong sector, which is under-owned and suddenly comes to the fore, it runs as a leader for 2 cycles, 2 bull markets. So they have a length of about, let's say, 8 years to 10 years. So if you take the example of pharma,
IT pharma,
after the 2008 kind of debacle, 2009 or something is when the pharma cycle started. And that ran all the way till about 2018. So it was almost like a double cycle. So every bull market has this feature. And the curious thing that I've observed using cycle study for a long time, and I have data going back many, many years, and it is that a leader of a bull market cycle is never a leader in the next bull market cycle.
So we are in the midst of a bull market?
No, that's not what I'm trying to say here.
I'm understand what will be the lead going into the next
What I'm trying
year.
to say here is, you take all these defense stocks.
Yes.
Right? They've all given you what? 40 times? 20, 30, 40 times?
At least.
Now you can definitely say that the bull market that we have seen over the last 4 years, or whatever time frame you want to put it, the defense stocks are the ones which have delivered humongously. Right? So your State Bank is an underperformer from that context.
Yes.
Right? So even though the outlook for defense today is like blue skies, orders are raining down upon them and people just cannot have enough of them. But any sector which has over-delivered like this over a sustained period of time and has kind of become a leader sector within that bullish run generally doesn't tend to repeat later. So to take the other point made by Khush here, saying that selectivity is required now, whether it is PSE or any other sector. Wherever there has been very large dynamic gains, I think you have to turn very selective. To go and buy HAL just because it got new orders and, it's going to do this and that. Bear market always sets in from the bluest of blue skies. I'm not calling for one in defense stocks, but I'm saying I'm just cautioning here that if you want to go into the PSE area, defense may not really give you that kind of upstick.
Opportunity.
But it looks so attractive right now. It may be good for a little bit more, but I don't think it's going to lead the next up move.
So, Gautam, I'll take and of course I'll take it to all three of you. Who do you think is going to be the leader? Because you did say charts can predict 2 to 3 years out. Where will the next leg of gains come from? What sector will it be? And 3 stocks that you are betting the house on.
Yeah, so there are 3 pockets in the market where I'm very bullish on. And I've been very bullish on metals for the last 4 or 5 months.
You got the call on gold, right? So I want to view on that
I want
too.
to come back to gold as well. So I think metals are going to do much bigger things over the next 1.5 years. We use concepts like relative strength, where we divide one sectoral index divided by the Nifty. And that's telling us that for the next 6 to 12 months, metals will continue to outperform the Nifty.
Okay.
So you would have names like SAIL and NALCO in the PSU space. You would also have the top names, Tata Steel,
Hindalco, Tata
JSW Steel.
yeah.
I think all of it. And now we are talking about the China comeback and the tailwinds fundamentally coming up
Rate
in the
cuts
last
that
1
potentially
month.
could happen in Europe.
Correct.
Yeah?
So I think metals could really be the space to watch over the next 1 year. That's number 1. Number 2, I think the next 1 year could see the comeback of banks.
Private or PSU?
Both.
Okay.
I wouldn't be surprised if SBI does much bigger things, even from these prices. Much bigger things. It could generate alpha to the tune of 2x of the Nifty returns. And I also do see a very big comeback in SDFC Bank and ICICI Bank. I think it's about time, and the charts are showing it. For the last 3 years, I keep getting a lot of chatter around it that now the turn is coming.
But did the charts show you that HDFC was going to go through the event that
Absolutely.
it did?
That's the beauty of technical
okay,
analysis.
Okay.
Just for
it's like astrology almost.
For the crowd here and for the audience,
Yeah.
I think if you simply do a HDFC Bank divided by the Nifty, there is something called a ratio chart. And if you just track that ratio chart behavior of the last 10 years, you would notice that for 7 years, SDFC did better than SBI. In the last 3 years, it was SBI over
All
SDFC
the way, yeah.
Bank. So that's number 2, banks. And number 3 is gold. I think we've been a big bull. At the starting of the year, I made the point that gold is going to beat benchmark equity returns. Look at where gold is today.
And that's what it's done over the last decade, right?
And I think
gold has
people
done compounded 12%.
See, people will be amazed with what gold and silver does even from now. So if you're taking profit in equities, and you need to take profits in equities from time to time.
Gold is a good hedge.
Please go ahead and buy gold and silver, because I think in today's world of geopolitics, you don't know what's coming from anywhere.
So the next SGB that happens, Gautam Shah has got a stamp of approval.
And in terms of my levels, I do believe, I'm giving you a lofty target, but that's what I believe in. I think at some point of time in the next couple of years, you'll see gold at $3,000. And at some point of time in the next couple of years, you'll see silver close to $40.
So metals, gold, silver, banks.
Yes.
SBI, HDFC, ICI. I've got that. Kush, you go next.
It might sound repetitive, but I think the power space, the capital goods space
Three
is
stocks.
Trill, transformers and rectifiers. Then you've got Jyoti CNC.
All of them are going to track this, huh? So yeah.
Track, right? I'm just track, right? Yeah. So transformers and rectifiers, Jyoti CNC, and I think the FMCG, we just discussed, seems to be making a comeback. So perhaps the like of Bata look a little interesting at the moment.
Okay. Dr. Narayan, I know you don't like to give buy, sell calls, but what charts do you like? We'll make this simpler. Or we'll ask it to you.
My way of doing things, I'm also a stock guy, right? I don't trade too much of indices, not in the options game. But I would say every bull market shows us on the charts a certain pattern which goes across sectors and across all caps.
Market caps.
I try to identify that particular pattern. So I am sector
agnostic,
I'm market cap agnostic. I have no problem buying something which is 200 crore market cap.
I'm making a loss or a profit, doesn't matter. Huh?
2 crore, whatever. So long as that pattern is there.
And where do you see that?
Right now that pattern is undisturbed. Even with all this fall and uncertainty and all that, I find that that pattern is undisturbed. And that pattern has been running from about 2020, the trough which we had. Since that, it's got formed and it's still continuing. So for me, it's not a sector thing. It's spread across whatever chart shows me that particular pattern. So looking at that, I still find all the capital goods, for example. They are still
you said
great.
Not sector, so give me 3 stocks where you're seeing
I would still be very bullish in the Siemens of the world and the ABBs of the world and Cummins of the world, despite the levels that they have reached. Now you may say that they have had such devilish moves and they may be way out of whack with what is valuation. But the way I look at markets and the way I buy and sell stocks is that I have 3 parameters. One is, of course, valuation, because the market as a whole looks at valuation, and since we are not bigger than the market, we have to pay attention to that also. But in a bull market, what really overrides valuations is sentiment and money flow. Now, this market is very rich in sentiment and very rich in money flow.
Right.
As long as this small spillage that we had over the last couple of days, if you were to ignore that, I do not see that sentiment being disturbed.
Okay.
It may take a month or 2 to get back on its feet, but it is going to get back.
So those are 3 picks from you.
So I would say, don't be shy of stocks which have run up big time.
Yeah.
I think capital goods has a long runway yet. So pick the best in them and pick the ones which have the pattern.
Now, one question I'd love to ask, but we'll take viewers, where it's very easy it's easier to tell you what to buy. No one ever tells you when to quit, right? At what point do you exit? And that's where I think a whole bunch of retail investors land up getting stuck. So anybody wants to take this quick, short answer, and then we'll open it to the audience.
So I think you need to have a financial target and a technical target.
Okay.
So when you have a financial target, I speak to a lot of youngsters as well. I tell them that what are you happy with? If you buy a certain stock, are you happy that if it goes up 20%, 30%, 50%, put a number. So you are planning for that kind of a
objective.
return. So that's an objective target. Otherwise, it's pointless and it's endless. You
and then you only know when the cycle turns.
So number 1 is an objective target. Number 2 is a technical target. Say, for example, you got the trade right. For example, Titan, which has been a multi-bagger over the last 10 years. You got the trade right. Simply use a moving average, plot it on the daily or on the weekly charts. Until that moving average does not break, you stay in the trade. So I'm bringing objectivity using a tool of technical analysis, which I think is absolutely flawless, and it has worked brilliantly in the last 3 years. Because at the end of the day, if there is an environment where serious money can be made, don't get out with 10% in 10 stocks.
Yeah.
So you could use a 34-period moving average. I like Fibonacci numbers. I don't like popular numbers. Everybody talks about 20 and 10 and 50. I like Fibonacci numbers. So a 34, a 55, plot it on a moving on your chart where you've called it right, and just ride it. Believe me, it makes it very easy to handle all the volatility at the markets, including what happened a couple of days back. Because if you had your moving averages on a day like Tuesday, you were still in the game because markets came back in the last 2 days.
On Wednesday, yeah.
And
so then I guess it does, okay, so I guess that's a more reliable measure than having an objective financial target, right?
Correct. But start with objectivity and then evolve based on
And that's
charts.
personal in that sense. Okay.
And
So
just to add to that, from let's say a non-technical perspective, right? An analogy that I generally dish out is when you enter or when you sit in your car, you know where you have to reach, right? Most people, when they enter a trade, they don't know where they have to reach. So when you enter, you need to know 3 things, right? 1, how much quantity do you want to deploy? 2, your stop loss, and 3, your target. Once the target is met, you could keep trailing that. That is fine. But at least when you enter the trade, have a number in mind. Most people don't, and that's where the exit becomes.
Stop loss is as important as the TP.
Yeah, absolutely. Because that's your exit point, right, on either sides. So have that before you enter a trade and respect that.
Okay, so
just one quick point, very important point, which I think would be valuable for the audience here. As late Rakesh ji said, the trajectory is important, not the magnitude. When the Sensex started rallying from 3,000 in 2003, nobody knew that it's going to top out at 21,000 in 2007.
You're right.
So we've started rallying from 7,000 at the COVID lows. We are at 21,000. Nobody knows where this is
Where's
going
next?
to end.
Yeah, it's very easy to sit here and predict and say because you're not going to be held responsible for it.
I've never been a predictor, even though I do have certain levels which I'm working with. So the key takeaway is stay in the bus. Don't be
And
fixated
if you're not on the
about
bus right now, get on the bus, na?
Absolutely.
With what we've seen in the markets. Okay, as long as we agree on that. But yeah, we'll start with, I think, Alex. Yeah.
Thanks a lot for the opportunity.
Yes.
My name is Jigar Shah. I'm a banker. Firstly, Gautam, it's heartening to know that the banks are going to come back. It's been sideways since some time. The question to anyone can answer, it's not a technical question. We've seen in the last 5 years in the government, and now the government is going to come back again. A lot of capital got attracted to the new age companies. We've spoken about, PSUs, metals, and so on and so forth. What about these new age companies? Because a lot of capital has gone there, whether it's digital, whether it's solar, whether it's EV. Since you guys are more closer to the markets, what do you see and which pockets are going to outperform? If you can give names of companies or sectors, that would be great.
See, this is more of a fundamental question, but as a technician, the question I ask myself is, can an India survive without a Zomato? I think you get your answer, right? And that's probably the reason you want to be in companies which cannot be disrupted overnight. I don't want to name some other companies which could have easily been disrupted because of technology or because of policy changes. But a Zomato is a 4X among the new age companies for this very reason. So without naming companies, I think just question yourself about these commonsensical points, and I think you'll be good with the companies.
Also, just look at the behavior. When we talk about technical analysis, we say that what we're analyzing is the human behavior, right? Zomato is basically a classic case in point. What technology can you not do away with today and is available in the listed space, right? So that's not just right now, going forward also. Perhaps that will give you the answer to where do I park money. Everyone's on the app, so.
Can I answer a version of this? You're asking about newer areas to invest. Why do you need newer areas? 2000 stock road trade hote hai bhai. And there is enough money to be made in what is existing here. What a simple way to look at it is, follow the steps of the big guys. That's a simple way to make money. What do the big guys look at? The institutions or the foreigners or whoever, the operators, big bulge bracket, whatever you want to call them. They look for clarity 4 quarters down, 8 quarters down. If that clarity is there, they push in their money into that stock. Now, if that is supported by a sectoral tailwind, they push in more money into it. So this is the thing that you want to look at. Every quarter that information is coming to you for free. So you look at the results which come out for all the good stocks, so-called, or even the poor stocks. Just look at the results And then look around. If you do not know how to interpret it, then you make some efforts to look around what other people are saying, meaningful people. If they find clarity for that particular stock's growth or that company's stock's prospects for the next several quarters, you can bet your last dollar on it that this stock will perform. Now, whether that will give you 10% or 80%, that is, it'll depend upon how things evolve for that business. But if you take any of the stocks, let's say something which is down and out, which is IT Pack. But if you looked at the IT Pack a few months back and looked at stocks like, let's say, Persistent Systems and Coforge and all that, they were going berserk while your Infi and HCL Tech and all others were not. Now, what is the reason? Like I said, valuation, sentiment, and money flow. The sentiment was soaring towards IT, but it was soaring towards the IT, which were traditionally into a business of body shopping and, that kind of minimal service-oriented business. But the new age kind of companies, which were catering to other businesses, now there was earnings clarity down the line. And which is why the funds and everybody loaded the truck on it. And the money flow towards that simply continued until a certain point of time when it doesn't. Now it will be very difficult to focus that point. We can do it if you are a good technician, you can do that also. But for a lay person who does not do very detailed technicals, follow the simple rule of looking at quarterly results which keep showing up, find out the outlier in that, and see what the big guns are doing about it. Now that will form patterns on the chart. So if you learn technicals well, you will be able to spot it without probably even knowing the fundamentals. So technicals is a very good way of trying to know where the action in fundamentals is happening. So my suggestion is learn technicals.
Yeah. Alex, I think there's a
hi, my name is Utkarsh Somaya and I invest in the markets like everyone here. Speaking of learning of technicals, can each of you please recommend 2 to 3 books we could read and get better at technical analysis?
I think you should read basic books. The tendency is to go into complicated books. Everybody wants to start with, Elliott Wave and W.D. Gann. They are very good systems in themselves. But I think you should read basic books. And I think you should read basic books about 5 times, the same book. Just read the book 5 times. So that your basics will get burnished. If your basics are not good, whatever you try to build on top of it is going to prove to be a disaster later. So just pick up John J. Murphy. It's like a Bible. It's an omnibus containing all the aspects of technical analysis. Read Martin Pring. Now somebody new will tell you that these are outdated books, but that is BS. Because technical analysis has been around from 1900s. And that has not changed because it's a study of human nature. And that doesn't change. So read Pring, read the basic books, but remember the thing I said, read it 5 times. Because every time you read it, you'll get a new learning. Because you're not the same you who read it the first time. By the time you read the 5th time, you're a different you. And your learning will be newer. And your basics will get burnished.
So I think I totally agree with the 2 books that he recommended. I have myself read it multiple times. But another book that I would strongly recommend is Technical Analysis of Stock Trends by Edwards and Maggie. I think it's an absolute classic. I would have read it 20 times. Every time I find a difficult period in the markets, I go back to the book, to the page where I made my markings, and I would strongly recommend that. But just another point here, please understand these books were written in the 1970s and the 80s and the 90s. So I would disagree with Sir in some sense here, because I think the world and financial markets have evolved. Everything is very fast. You didn't have WhatsApp, you didn't have social media in those times. So those books were written for those times. And the times have pretty much changed in the last 20 years because everything is much faster. We talk about overbought and oversold signals. We talk about negative divergences. Reading them is a different skill today than in the past. So definitely have your foundation perfect. but please apply them looking at what really happens on the charts on a day-to-day basis. I think that will make you a better trader and investor.
And of course, you can watch Gotham on TV and Dr. Narayan's column every month on NDTV.
Yeah, a quick line on that. I read it somewhere that, the people who ask for book recommendations don't end up reading them. So, but on a lighter note, that was on a lighter note. I think enough technical recommendations. What I realize is that as a trader, I'm not sure if you want to be a technical analyst or a trader. If you want to become a trader and an investor, technical analysis is a tool for you. The strategy that you devise gets worked up here, right? So you need to also read books on persuasion, how your mind works. So there's something called, The Art of Thinking, I suppose, right? And a couple of other such books that this is beat me immediately, right now. But read books on psychology and how to approach it from, let's say, psychological angle, correct? Because you want to become an investor and a trader at the end of the day. You could leave the analysis to us, perhaps. But no, read books which will tell you how to approach markets, how to react when the stock's not doing well, how to approach a stock when it's actually doing well, correct? I've been known to deride averaging for the longest time. No, I'm not I don't say I don't like averaging, but there are scenarios when you need to do averaging. But as a trader, you might just end up doing it every time because you're just so tempted towards it, right? So more persuasion and psychology along with some technical analysis.
Hi, I am Rahul from Meta Equity. This question is that regarding about the technical, did you see any evidence or indicator about the Tuesday fall on the chart?
You'd be surprised. Okay, the magnitude was, of course, a question mark, and we can never time the market. So I don't think any of us here will step out and tell you that, oh, no, of course we saw. We would have perhaps today been somewhere else, right? You cannot time that. But what he was referring to about, divergences. If you saw the weekly setup, there are divergences on the Nifty and the Bank Nifty. So there was something saying that, okay, it may not be, as big a jump perhaps, or maybe the, profit booking would have come a little later. So very difficult to time to the day and to the point from where it will turn. But then there are signals which are suggesting that you may not go all out just yet. So perhaps those indications. But did we also get sucked into the rally? Yeah, to some degree we did.
I think just small data points. Your PCR and all also has indicated that there wasn't going to be a runway rally anyway on Tuesday.
See, any which way, it's not important. Look at the bigger picture. Play for the bigger picture. Be positioned for the bigger picture. I mean, I remember I spoke to every single team member of mine on Tuesday that because Tuesday happened and because the market fell, 1,700 points, are you going to stop your SIP tomorrow?
No, you'll double down.
Every single member of my team said no, because that's a discipline that I've put in. So if the SIP and 20,000 crores is not going to stop, these aberrations will come. They will be an opportunity. You don't need to be on top of them. Treat it as an opportunity and get in. Have your supports intact and not really your resistances.
See, Kush spoke about reading books on psychology. It's extremely vital. You may read up and become a total expert on technical analysis. It's not difficult, right? You can become a super fundamental analyst. That is also not difficult. But these two, in my opinion and my experience of over 47 years in this market, they constitute 10% of your success. That's all. 10% is the net sum of influence of technical analysis and fundamental analysis. The rest of the 90% comes from how you frame your mind towards who you are, what type of player you are, what is it that you desire from the market, and how are you going to control yourself when all these kinds of Tuesday type situations hit. अब स्टैंडर्ड लाइन क्या है मार्केट में? बाय द डिप. आप मुझे एक आदमी दिखा दो जो डिप में लिया, कसम से एक आदमी दिखा दो मेरे को. नहीं होते कोई.
और कोई डिप डिफाइन भी नहीं करता वैसे.
वो तो करते ही नहीं है, इसीलिए पता नहीं है. And nobody has the guts to buy it on dip. That's a nonsensical statement. It's a theoretical concept statement. But nobody can do it. Only the people who have got it correct or aligned in their mind will be able to buy a dip. Maybe not at the bottom, but soon thereafter. Which is also good enough. But everybody is a breakout buyer. Everybody. Including mutual funds. They are not immune to this also. Because breakout buying is easy. It is so evident that even a child can spot it. So, Many of your technical tools are designed towards breakout. Many systems are designed towards breakout. There are very few systems designed towards buying dips. So the moving average technique which Gautam spoke about is a mean reverting strategy, right? But when it reverts to the mean, either kaleja kiske paas hai lene ke liye? They think it will go lower. And that is where all the other part, the 90% which I am talking about, really comes in. Becoming a technical analyst is not a difficult job. Becoming a fundamental analyst is not a difficult job. Its limited contours can be learnt. But बाकी जो 90% है ना, it's an on-the-job learning. But किताब तो पढ़ो पहला.
One last line on this in a very simplified way. टेक्निक तो विराट कोहली के पास भी है और टेक्निक तो उन्मुख चांद के पास भी थी. बराबर? It is how they applied it, correct, made all the difference. So.
Yeah. Next question. Yes.
I'm Anil Maheshwari, investor. I wanted to find out, has the market bottomed out on the 4th? Do you all think it has bottomed out on the 4th of June? And the second question is, has the mid-cap and small-cap index made a double bottom?
See, the very fact that you are asking that question from an analytical perspective says that the bottom is not in.
Not come.
See, there is a branch of technical analysis called Elliott wave. It is slightly esoteric. But within Elliott wave, it clearly says that when everybody is looking for a bottom and wants to buy that bottom, that's only part of the correction. So when you say part of the correction, it means that the correction will go on for a little while. Now, if everybody in this room feels that the market is bottoming out and I missed this glorious chance to buy on the 4th, then you can take it for sure that 4th is not a bottom. But if you're the only guy looking for that bottom, then there is a possibility that it might have bottom and everybody else is waiting to sell. So consensus of opinion about bottoms seldom work. It's only, see, if you go back to big bottoms of this market, say August 2013, nobody wanted to own shares. Nobody. They were just throwing them away. And that is when the Nifty was at 5,800. Okay, the Nifty. And they were just throwing it away. And the same situation repeated in February of 2016 when everybody was so mortally afraid that capital gains tax was to be imposed. And nobody wanted to buy any stock. Those were the two significant bottoms. Now COVID was a huge reset and everybody said COVID से bull market शुरू हुआ. अब 2020 मार्च का बायर इधर कोई है तो हाथ उठाए. बहुत बढ़िया. So, but only 2 out of so many, right? So now you think of the millions who are there, there'll be only a very few people who can get their mindset right and their analysis correct to buy those bottoms.
Right.
At the bottom, the sentiment is how much more will it fall? So you will never get that answer unless you are able to analyze it yourself and look around you. So some amount of analysis will be required for that.
Right. Gautam, you want to very quickly go, short answer, is it a bottom made on the 4th or you think there's some more pain to come?
Yeah, so that's the way I do my technical analysis. I think the bottom is made.
Okay,
In
great.
fact, I was on NDTV on the 4th in the afternoon and we were discussing about that. And I made the point that I just want to wait for the end of the day because the market loves the current government. Let's be honest. You know, you had the biggest breakout, you know, in the last 10 years in 2014 when the current government came to power at a level of 70 to 100 on the Nifty. So once the market got the comfort that the current government is there for the next 5 years with some challenges, with some alliances,
It came back 3.5% higher.
We are 1%, 1.5% away from lifetime highs.
And we're only
let's put it realistically.
Year to date.
Absolutely.
Just one last.
Thank you for very interesting session. This is one of the best sessions I've attended. Nicely conducted by anchor Samina.
Thank you.
Thank you so much.
मेरा इधर आने का पैसा वसूल हो गया. So my question is, sir, in many business channels like you, for last sometimes experts have predicted Nifty 50,000 in next 5 years and Sensex 1,50,000 in next 5 years. Now with the change of political scenario, with the coalition government now, do you think the same prediction maintains, or should we believe these predictions and stay invested, stay in the bus, and can we add some more investment to our portfolio?
So let me answer this in a very different way. Exactly 10 years ago, mid 2014, can anyone tell me what the Sensex level was? 2014, May, June. Can anyone tell me what the Sensex was at? 22,500. So even if history doesn't repeat itself, even if it rhymes, and even if we don't get to 75, perhaps in the ballpark, and from the last, maybe the 10 years is not a bad, good example from a political change standpoint, but the markets have risen irrespective of whatever has happened on the political front, right? So there's economics and politics, right? We've heard that. So I think irrespective of that, you should continue to invest. And, Sensex, the returns on the Sensex being my guide, I will vouch for that number and perhaps invest for that number for myself.
The jargon is it's not timing the market, it's time in the market. And I think that holds true as much as we all want to try and time the market, which, like you said, very difficult to get.
I would just want to put a point here. I think it's a combination.
Yeah.
Because time in the market for
Actually, you're right. If somebody got on 20th March, COVID 2019, you'd be...
Let me give you a great example. PFC and REC. Yeah. Time in the market, you could be there 8 years.
Yeah.
5p did nothing. You get frustrated, you get out thinking that I gave 8 years to this stock. And then it becomes a whatever 5x, 7x. So time in the market, along with timing in the market, is the mantra for today's technical analysis.
Wealth creation.
Also, we were looking at coalition governments over the last several years, and from, I think, 1990 or thereabouts, the best years for the equity markets have been during coalition governments.
So we're in a good place. In-house. We'll take this in the office. One last question, guys.
Yeah, this question is for Dr. C.K. Narayan. And of course, both of you can also take it. The sir talk about that he sees certain pattern on the chart, the before taking the call or a trade. So sir, can you just throw more lights or label that or name that pattern?
See, for me to describe that pattern, you'll have to have some knowledge of technical analysis. Right? So instead of naming this pattern, which is a little more detailed, okay, I'll put it more simply. What is required for you to make money from the market? That is the existence of a trend. जिस स्टॉक में ट्रेंड नहीं है आप कुछ भी कर लो रुपया नहीं बनता. So first thing for you to find out is there an existence of a trend? Then the second thing which you have to find out or you can make your own pattern, is for persistence of the trend. Is the trend persisting? Now you have a variety of tools to gauge that. The third thing that you need is there is some evidence of reversal of a trend. Now again there are tools set which you can get for knowing the reversal of the trend. There is a big difference between reaction and reversal. So you need to be able to know technicals in a manner or marshal your tools in a way that you are able to tell apart a reaction from a reversal. Because a reaction is within the trend. A reversal signals the end of the trend. So whenever you make up a system, it should be a kind of a combination of this. Now since you are nodded your head saying that you know some technicals, I'll tell you a simple way. Now moving average is something which Gautam swears by. I also swear by it. Because there is nothing simpler, nothing clearer than a moving average. Okay? Because it's a straight binary. Either it is a yes or it's a no. There is no halfway about it. So you need to have a moving average on your chart. Now, assuming that you are not a day trader and assuming you are looking for some sort of a long pull, few months, few years, you need to pick the chart accordingly. So you cannot be looking at hourly charts or 30-minute charts and all that. So assuming you are an investor, you should have a weekly chart. So you plonk your moving average on the weekly chart. Now the period is something for you to judge. How aggressive you are, how laid back you are, how much room you want to give it to breathe. 25-week average, 50-week average, 20-week, whatever. You decide on the moving average. Now that's your long-term indicator. The other aspect of a trend is existence of momentum and persistence of momentum. So you need to have a good, reliable momentum indicator. So a very widely used momentum indicator, I would say 99% of technical analysts across the world will use RSI. So you rig up an RSI there. And there is another beautiful indicator made by the same developer of RSI called Wallace Wilder. He also designed something called the ADX system or the DMI system. If you have a combination of candlestick charts on a weekly basis with a good moving average there, now how to find out the right moving average? I'll give you a simple nuance to that. That moving average should have worked in the past. नहीं तो हर एक आदमी का एक एक पीरियड है. The simple rule of the thumb is, if it has worked in the past, it is a chance to work in the future. So if that is some 37 period moving average, so be it. Nobody needs to be wedded to a 20-day moving average. That is just in papers and magazines. So you pick that moving average, put it on a candlestick chart, right? So that patterns are clear. And then you buy dips into that moving average, so long as your momentum indicators are intact. If you use the ADX DMI indicator on a weekly chart, if your positive DI is above your negative DI for long periods of time, from the point they cross, you keep tracking it for the bull phase. And as long as that does not collapse into a negative phase, and as long as your RSI does not desert, say, the 50 level, which is like a neutral level, if a stock has an uptrend, then that RSI has very little business going below 50, except in short-term reactions. So when you use this kind of trend following, trend anticipation, and trend tracking, 3 indicators, you can make a decent system. So any system that you create out of technicals has to be logically thought out in some similar manner.
Okay, that is a masterclass in technical analysis.
Next
so
time
please
you've got
give
a charge for this event.
big round of applause because you're not going to get this anywhere. And please, I will thank Dr. C.K. Narayan after this event. I'm sure that you would like to as well. We're running out of time, unfortunately. So quick questions and quick answers as far as possible. A couple more questions.
There are 2 there, just, okay. Gautam, you want to go for this one? Without a mic, huh? This is...
See, I don't want to comment on specific stocks, but let me give you an observation.
Unless it's HDFC.
In the last 1.5 years, while everybody was fighting over Vodafone, Bharti did what it had to. It is one of the best performing stocks in the Nifty. Bharti, right, in the same sector. So the point is, if the trend is not there, you don't fight over it. Because sometimes we get obsessed about certain stocks, and we also get obsessed when they are cheap stocks. Right? Because you get to buy more. But logically, there is no logic that you have to buy cheap stocks to make serious amount of money.
But also
if you did the same thing about Bharti, you would have done much better. So I'm still committed towards a Bharti because I don't see anything wrong with the trend. Vodafone Idea, if it does well, it could do well. I don't have a view.
There on the fundamental side, there are a whole bunch of foreign brokerages that have an aggressive.
Can I give him an answer?
Please, short one this time, Dr. Narayan.
You said you want to hold it for 5 years. That is arbitrary in the first place. Let's assume that you want to hold it for 5 years and it is today at 14 rupees, 15 rupees, whatever. And in 5 years, what do you expect? 50 bucks, let's say, theoretically. Right? Whatever. Let's put 50 rupees as a random target. If that stock has to go from 14 rupees to 50 rupees, then it has to do all the right things where in its business, which you will never know, in its fundamentals, which you will know at a 3-month kind of interval. But you are looking at the stock and holding it and experiencing it every single day. Where will you know? You will know it on the weekly chart of Idea. On that weekly chart, it has to keep doing all the right things. Now, what are the right things, you will ask me? I just told you one formula. You just apply that. If it does not break the 25-week moving average, hold it. If the RSI does not go ori, hold it. If the DMI picture does not change or the ADX does not stop falling, hold it. But the minute any of these go ori, then your thesis of 5 years may not work. You may hold it for 5 years, but
at the current juncture, does it show strength? I don't know whether he'd know how to do these, but of course, it'd be great if you do. But at the current juncture, at 15 rupees, is it showing strength?
Of course it is. It's been showing strength from 12 rupees. That is why the whole of the market is after it.
Quick 30 seconds, Samina, on this. You might
20.
like this. 20.
Oh, yeah.
So, do you watch NDTV Profit?
That's taken a
Correct.
long answer.
No, I'll tell you
I
why.
can't give you the answer.
Because Samina, from the studios, whenever we had an interaction, has been asking me, idea, what do you look? What does it look like? Idea, what does it look like? And I've been saying Bharti, like, idea, what does it look like?
So now we have
we've
two
had that
Bhartis
discussion,
and
and you would know exactly. So.
Great panelists. Thanks a lot. What's the say on AI at the moment? Will it become something new, something outstanding?
I have no way of plotting AI on a chart.
I was just going to say something similar, very philosophical, so perhaps the next
No,
session.
means a sector which becomes, like railway became a sector altogether. So big money was made there. So
not too many options, right?
See, I think AI will change the way we trade markets, and I think it will take away the easy money making process. I got into the market 20 years back when the Sensex was at 3,000. I think there was no talk about AI. So, we played these last 20 years in very normal scenario. So now AI is definitely going to disrupt the world, no doubt about it. And I don't think I'm the right person to answer it. But the idea is to acquire as many skills as possible, because if AI comes and tries and disrupt your own trading and investments and your own lives, you need to be prepared. And I say this to all the youngsters, that it's, the job market is going to be far more challenging over the next 5 to 10 years, because AI is definitely going to take over. And that's really the general talk in the IT industry as well. So acquiring skills, doing different things, having a holistic approach to analysis is very important, and not just looking at that one pattern, one trend line, one moving average. Consider them as a tool. Use 7-8 tools together. You cannot go wrong with research.
Hi, thanks for the opportunity. Gautam, Gautam, this question is specifically for you, since you mentioned about gold and silver. So what should the allocation be in the portfolio, specifically for gold and silver both? Thanks.
See, that's a personal profile, to be honest. I think historically people do not go more than 5-7% of their allocation to gold and silver. But I have made this point multiple times that you can go as high as 15 to 17% in terms of allocation to gold and silver. Also, maybe you could have a global portfolio. I mean, why just be with the SDFC banks and Reliances of the world? I think people should also consider having an Apple and an Amazon and an Alphabet in their portfolios. I think going forward over the next 5 to 10 years, you need to be ready for local and global shocks, right? And there could be many surprises. So 15% allocation to gold, a 60% allocation to Indian equities, because that's the story hopefully for the next 5 years, and balance allocation to global opportunities.
Okay. Unfortunately, we're going to have to draw this to a close. There are lots of questions, I know, but I've been told to promise you that we will do more such events, and
we will definitely bring more such events, and we'll bring them on TV as well. Thank you so much. Great interest, and I'll let Alex close this.
You've all asked fantastic questions, so I would invite you to tune in on an ongoing basis as well. We are live on all social media platforms. We have a WhatsApp number. You can communicate with us directly, and I'm sure that Neeraj, Samina, Tamanna, who was here earlier, all of us would like to hear from you on an ongoing basis while we're speaking to you on television and on the other platforms as well. And thank you so much for joining in. Another round of applause for the lovely panel over here. Samina? Okay, so It's fallen to me is to once again say thank you to all of you. I've pretty much said that, but I'm going to say it again. Thank you so much for coming in person, for everybody who's tuning in from home or wherever else. Thank you so much for your participation, and we look forward to bringing more such events. And hopefully you'll tell your friends and family, and more of you will come over. Yeah. So thank you so much. Take care. Have a nice